Over the weekend, we're hearing rumors that Fed Chairman Jerome Powell might resign. He's been under an incredible amount of pressure from Trump recently. The Fed has been very hawkish when central banks around the world have been easing rates and inflation has come in to their target. So, what gives? Why isn't he lowering interest rates? What might happen if Powell does resign? Well, almost certainly someone that is more dovish is going to take the helm, and that would mean that interest rates are going to come down, which would be ultimately bullish for the market. Now, the market won't react favorably if he gets fired by Trump because the market will feel that Trump's exercising too much power. But if Fed Chairman Powell resigns on his own, then I think the market could actually receive the news well. I don't know if that's going to happen. We have an FOMC statement coming up in about 2 weeks or so. The chances of a Fed rate cut are somewhere around 5% right now. Everyone's really kind of targeting that September date, that September timeline. Right now, the probability of a Fed rate cut then is 45 to 50%, and it could possibly go higher, especially if we start to see some employment weakness. So, for right now, they're just rumors, they're not substantiated. We do have a lot of other news coming out this week, but before we get to that, I'd like to review the last couple of picks that I've given you. Last Sunday, I gave you AVGO, and we were looking to sell an out of the money bullish put spread on a pullback in the stock. It looked like we were going to have a pullback overnight for the S&P 500, which we did, but there was a brokerage upgrade that came through on AVGO, and the stock never pulled back Monday morning. That's really what we needed to get that spread done, was a pullback Monday morning. As time started to unwind, the odds of getting that trade done were smaller and smaller. And after 2 or 3 days, we really didn't want to enter that trade. Our goal was to get that spread off Monday morning and then to have the market bounce. The other trade that I showed you was JOBY, and I loved selling out of the money puts on this stock. We were looking to sell the $10 puts, and all day long Monday, they were bid at 40 cents, they were bid at 50 cents, and you can see the stock is at $12 right now. Those $10 puts that expire this Friday, July 18th, were no bid, offered at a dime. You probably could have reeled them in for a nickel. They had lost 95% of their value. That was a really nice trade. Then on Wednesday, I did a video and I highlighted a couple of shorts. One of the shorts was Adobe, ADBE. And I mentioned to you that we needed to see a horizontal breakdown, which we actually got on Wednesday. And once we'd have that breakdown, we should see some follow through selling. Well, you can see off of that breakdown, we had excellent follow through. So anywhere from, let's call it the 375 level, stock trading all the way down to 363 on Friday. More than a $10 loss. Really nice trade. So hopefully some of you got in on that trade. And I had also shown you CMG, that's Chipotle Mexican Grill. And again, we needed to see a breakdown. That was the caveat before we would do that trade. We needed to see a breakdown below the 200-day moving average. You can see that I put an alert line below the 200-day moving average at recent lows. Never happened, so you would not be trading that. And in general, shorts have been very difficult to find right now because the market has been in nice rally mode. It's trying to push higher and higher, but as you can see in this chart, this is the price action that we saw this week. The market has struggled to advance. I feel that given where the market is currently, you can see we are in a horizontal compression. We have not been able to advance after breaking out to a new all-time high. I personally feel that the odds of a market pullback here are higher than the odds of the market advancing and making a new high. So I'm just looking at this probabilistically, and what news do we have this week that might possibly drive the market? Well, we're hearing that Trump is going to be increasing tariffs. They already increased tariffs on Canada to 35%. August 1st is the timeline for that. Now we're hearing that Mexico can expect similar, and we're also hearing that the EU could see a 30% tariff. So, big news. The tariffs are starting to finally play out. It tells us that the negotiations are progressing slower than Trump might like. We already saw that 35% tariffs or 25% tariffs have been imposed on Japan and South Korea. So now we're starting to finally see Trump's master plan of all the tariffs come together. We don't know if there are going to be any trade deals announced, but I suspect that there won't be many. India is one that I'm hearing rumored might actually happen. The other news that we have going on this week is we have a fair amount of economic releases. We've got Empire Manufacturing, we've got CPI coming out towards the end of the week. We have PPI coming out towards the end of the week. So those will be fairly important numbers. Philly Fed also comes out. Those are all going to give us an indication of how strong the economy is. We heard that Amazon Prime Days, that the sales were actually down quite a bit, but now Amazon is reporting that there was a 30% increase in Prime Day sales. But what we need to keep in mind, and this is really important, is that instead of having a 2-day event, they had a 4-day event. So over the course of the 4 days, sales were up 30% versus a year ago when they only had 2 days. Well, you would think that if they doubled the number of days, that they might double the revenues that they generated off of it. And that's not what happened. I feel that consumers are starting to pull back right now. We also have earnings season coming up. So we're going to be hearing from JP Morgan Chase, and I believe that that number is going to be coming out on Wednesday. So let's take a quick look at JPM, and we can see on the 15th, so that's Tuesday. Tuesday is going to kick off earnings season. It will be heavily dominated by bank stocks over the course of the next 10 days or so. I'm going to be watching to see what bad loan provisions are doing. What do those write-downs look like? What do the banks have to provide us with in terms of guidance? And keep in mind that the projections for Q2, if we look back to March, were a 9.4% increase in earnings on the S&P 500. In the last 3 months, those projections have been revised lower by analysts down to about 5%. That's almost a 50% haircut. That is substantial, and we haven't seen a decline like that in a very long time. Companies like FedEx are not going to be providing guidance beyond the current quarter, and we could see that for many companies that are about to report because they don't know what the impact of the tariffs is going to be, and so they're going to wait and see how everything plays out. The market's not going to like that uncertainty. So when I start combining all of those different influences together and I take a look at the market technically, what are my odds for an upside breakout? What are my odds for a pullback, a market pullback? I feel that there's relatively little upside potential and a fair amount of downside potential if all of these tariffs start generating a negative reaction and if those earnings start to become a concern. And we also have the FOMC coming up. So I'm not bearish, selling everything and aggressively buying puts. I'm just day trading right now. I still feel that there's another week to 10 days before we hit that heavy news window where we start really getting into earnings season. We hear from the Fed. Those are key elements to the market moving higher or lower over the course of the next couple of weeks. So this is a great time to really be flexible and be in a cash position and to keep your trading fairly small and to focus on very short-term trades. That's how I'm playing it. And since I do prefer the short side, I'm going to show you a couple of stocks that I think would actually fit the bill because they're already showing signs of strain. And I went in and took a look at PENN, PENN, PENN Gaming. Nothing too daunting on this stock, but we are seeing that this was a relative high, and we have a bearish engulfing candle of sorts. Now, it didn't open above the prior close, but we're seeing that the stock gapped down and it took out the open from that candle that had made a new relative high. That's the first line of support. And just below it, we had the 200-day moving average, and the stock was able to close below that 200-day moving average. So, from a shorting standpoint, this tells me that this is a short-term market top, and you can see 200-day moving average providing resistance, 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 resistance. We finally broke through it on Thursday, but that was instantly smacked down. And that tells me that there are sellers at this level and that we can expect the stock to leak lower. You can also see that at a time when the market was drifting higher, little by little by little, what was the stock doing? Compressing. It could not advance, and that yields relative weakness, red line below zero. That is a sign that there is selling pressure. So if we get any kind of market decline, I checked the futures a few minutes ago, they were down about 25 S&P points, so it looks like we're going to have a negative open tomorrow. That can change overnight. What we'll be watching for in PENN is if there's any kind of attempt to get back to that 200-day moving average, we want that smacked down immediately. And ideally, we see the stock follow through on that selling pressure that we saw from Friday, Monday morning when the market is down. So we don't want to jump on this. If PENN, it closed at 1783. If the stock opens at $17 or lower and it gaps $1 lower, we're not going to be chasing this pick. What we'd like to see is the stock opening flat. Maybe the stock tries to bounce a little bit and erase some of these losses from Friday. And that little bounce in here hits instant resistance, and VWAP from Friday would be a pretty decent level to look at. But if the stock tries to get above $18 and gets smacked instantly with the negative market open on Monday, I would say that's probably going to be a decent entry point. And you can see the volume was pretty good right in here. You can also see the volume on that breakout from Thursday and then the selling pressure that ensued on Friday. This tells me there is firm resistance in place and that this stock is much more likely to go down than it is to go up. So I really like PENN. And another stock that I happened to notice was LYFT, LYFT. And there you can see nice, steady selling pressure. Really pretty decent volume towards the end of the day. Let's take a look at the daily chart. And there you can see that the stock has been making lower highs, and the stock pulled back in this nice trading channel. It bounced off of the 50-day moving average, and then it rallied and it compressed. You can also see that it is weak relative to the market. It's been weak relative to the market for almost a month and a half now. And Friday, we got a breakdown below this 50-day moving average, and you can see that the last 3 days, the stock has been very, very weak, closing near its low. And even when it did rally, it found resistance at AVGO. So I like LYFT. I think that's going to be a nice short. Again, on Monday, we don't want to chase a big gap down. We want the stock to open relatively flat, and then we want to see that selling pressure start to surface after a half an hour, 45 minutes of trading. And we don't want the stock to challenge and be above that 50-day moving average. So that's another play, and I believe that it has a good possibility of testing that 200-day moving average. So that's about $1 drop on a $15 stock. That's a pretty nice move. Those are the types of trades that I'm going to be looking for right now. If you like the content of this YouTube channel and it's helping you trade, please give the video a thumbs up and make sure to subscribe to the YouTube channel. Turn on your notifications so that you never miss any of these trades. And Wednesday, in the live event of the YouTube channel, there's a tab called Live. Make sure that you check that out, because Wednesday I plan on doing a live event with Harry, and I'm sure that we'll have lots of your questions that we're going to be answering. We'll also have some really nice trade picks for you, and we'll follow up on LYFT and PENN. We'll see what the market's doing, and we'll see if these stocks performed as expected. Thanks so much for watching. Hit that thumbs up, and we'll see you then.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.